hasn't been like that for I think 2 3 weeks. In fact, even before that, we're probably not excited. I was probably tricking myself. But today I'm excited. We're starting to see some big interesting moves. Remember, the Fed just cut, well, they not cut technically, but pretty much opened up for a cut this year, and that has caused something like gold just to rally massively. That's a very good reason to be excited. The market is up. Wow, yes, it's up with about 10% really. Spiked up with about 10% gain almost. Since we were looking at this just a few months ago. Uh, Let me see here now. A bit confused here. Yes, it's correct. I was getting a bit confused here now. Uh, Let me correct what I just said here. There we go. It's 5.58% in the last few days, which is a big difference. For some reason, my brain was like, "Wow, did we really do 10% in just a few days?" But obviously, I had it on the daily chart. In either case, as you know, I've been talking about the break here to the upside. A break to pretty much this high here, 13.74 and 13.66. And we did talk about a few setups already yesterday. So congratulations if you've been holding on to those. As you might remember, we said that we could buy in this little zone at 1342, targeting these levels. So we pretty much reached that. So obviously right now I'm enthusiastic, and of course because of the potential rate cut coming up, I think this will continue to trade upwards, giving that long-term outlook. But if you did buy down here, then there's nothing wrong booking maybe half of the position here right now, just because the markets have been sluggish, and you never know, maybe the market's going to go back being boring again. And I think we will have some sort of corrective move. So congratulations if you traded on this idea I've been sharing with you guys over the last few weeks. In fact, we turned bullish already down here at 1303. Now, again, what I just said here is that if we just get rid of all of this now, and I'll just show you the big picture levels, we've been stuck here for many years. In fact, this price has been around these levels since 2013. And then you have this way connecting that this on itself will be an ascending triangle, and you could just put a line like that, and that suggests a 220 pip, a $220 move per contract, which would take you up to 1,600. So I found that really interesting. And then the different interpretation where this is the head, and I guess this is the left shoulder, and this is a double right, and that gives you an even more aggressive target. What's interesting is that again the market will probably continue to trade upwards on the back that would trigger this massive move. Because stock markets are trading sideways, euro dollar trading sideways, but finally we have gold now actually looking to move up higher. So how can one trade this effectively? Well, there are different ways of trading this effectively. I know some people that are already long from these levels. It's also fully possible that we're going to have a corrective move. I think that's rather likely. So this is the short-term level. This is your 1 hour chart. And we begin by identifying the trend defining level, which is here 1341. So as long as you trade above that level, the trend is going to be bullish. Because sometimes at these big levels, the market spends some time trading sideways. However, as long as you trade above 1341, we're dealing with an uptrend. Now, the second thing we can do is put a fib on this, and then you get these levels. So, if we pull back to the first fib of 1374, then that would not be unsurprising. In fact, that's pretty much what I'm anticipating. I think we can go down maybe to a level between the 50 and the first fib. So that would take us down to around 70-ish. Let's say 71, like that. And then if you just look to the left, if I look at the daily chart, it will be in the proximity of this high from July 2016 and just above the highs here from January 2018. This whole area here now will most likely act as support. Again, I'm very enthusiastic. Let's see what happens. As always, we need to manage our risk. This is not like go along with your account and just hope for the best. As always, we need to make sure the risk is in place. And I usually trade risk between 1% up to 2%, and my average loss is usually just 1%. So that's really what I do most of the time, and I'm treating this no different. So let's see what happens over the next few days. Again, congratulations if you've been buying on these little dips as we've been discussing. I don't think it's a bad idea to book half of the position just because we can potentially move lower. And then I would look for this to go up to maybe 1,400. And then it's going to be a process. It's probably not going to go in 1 week or 2 weeks. It's probably going to take maybe 2-3 months for this to move upwards. What we want to look at next is on Friday, PMI figures from the Eurozone and the US. The PMI figure last time indicated like an annualized GDP growth of about 1%, which is very, very low. And it's definitely below the 3-4% that Donald Trump would like to see. So if those numbers keep on printing soft like that, then most likely, the Federal Reserve are going to be more interested to cut interest rates. And also what is interesting is that they're pointing towards PCE inflation, which is our preferred inflation measure. That by the end of the year was before projected to end at 1.8. Now they project inflation to end at 1.5. That's why, and that's obviously lower than the 2% target, and that is why they're now cutting interest rates to get inflation back up again. So PMI indicators, then in 2 weeks from now we have the NFPs. If the PMI have a strong push to the upside, NFP again sort of starts to turn really bullish again, then maybe the market will temper their expectations and we might not see a massive move here. But if there are bad, which would not surprise me because of the trade wars, then probably going to see gold be further supported. Let's take a look now at some of the other markets, and we'll take a look at the dollar versus the Japanese yen. So the dollar versus the Japanese yen is a little bit, it's going upwards, but what's happening here, I think, is that from a relative interest rate perspective, this market should really be trading closer to 105. And the Federal Reserve, again, are cutting interest rates. The market is, however, bouncing because the S&P is up with 0.8%, the Nasdaq is up with 0.26%, and the German DAX is up with 0.8%. So that risk on is sort of lifting the dollar yen here. Now, we need to remember, as I've been saying over the last few days, is that the best forecaster is the Federal Reserve, and they're not going to just go and tell us they're going to cut interest rates if they're not worried about the economy. So I am a bit sort of surprised that people are actually buying stocks. Now, I'm not going to fight that. In fact, yesterday I shared with you some bullish setups that are doing really good right now. But I think eventually, maybe already on Friday, but most likely with the next note from payrolls, if the numbers are bad, which would not be surprising, then I think we'll have a weakness again in stock markets, and that should pressure the dollar yen, pressure risk positions in general, like the stock markets, and boost the yen really. So here as well, technically, you have that sell-off. Now you're having that little bounce, but I think from pretty much 108, I think people are gonna be quite keen on short selling with stops just above the high. We did slide below this level, but I see it's unlikely we were gonna rally upwards, because the Federal Reserve traditionally, they raise interest rates, they raise interest rates, they raise interest rates, the economy slows down, okay? And it's not that they can just cut a few times and then the economy balance itself out. It never really ever managed to do that. In general, most rate increases tend to lead to some sort of severe economic slowdown. And this time around, it's not even, obviously it's Fed is part of the equation, but we have trade wars, which is exaggerating everything. And that, I would say they're probably 50-50 here on the causes of an economic slowdown. So I don't think but the way stock markets are reacting now, if we look at the S&P, which we said you could buy here if you wanted to, is acting in a way where it thinks that cuts by the Fed is going to cause the economy to bottom out from this 1% growth and maybe go upwards. And yeah, maybe they will get it right, but it's not really my main scenario. I think they're gonna get it wrong, but let's see. Here in the S&P, the market moved back to the buy zone. I have now reduced the trend defining level a tiny bit. I think we can reduce it again. We can just put it just below yesterday's low. Sorry. We can just put it below yesterday's low, so that's done. And if you did buy on this, I think you can probably keep it for a little bit longer. But then just before US markets are gonna open, it's probably good to take a bit of profit. That's at least what I would have done. I personally think what it's gonna try to do is gonna try to go up there. It's gonna try to stop out everyone in the short, so we might go a little bit above it, and then it's probably gonna move back down again. But for now, the trend is bullish, and again, I'm not gonna fight it. There's more to the world than just the Fed. And from a sort of very long-term perspective, if you look at this from a weekly chart, you have a major high here, major high here, and a major high here. So you have a massive triple top-ish and a funny looking head and shoulders, maybe big rectangle as a minimum, and that sort of suggests if we take out the high, we could potentially see this trading much higher. So I'm not gonna fight this one. I might even buy a bit myself, but I don't fully understand, and I prefer gold because there at least I understand what's going on, and I prefer dollar yen because I understand what's going on there as well. Now, if we take a look at the euro is trading sideways here, but we just had some comments from ECB members. I think I saw it on my Twitter. There we go. It was here. So ECB Deputy Luis de Guinidos, he said rate cuts are only a possibility for now. But yesterday he said that QE can even be something, and Mario Draghi in the beginning of the week said interest rate cuts as well are a possibility. So what's going to happen now is that if the Fed and the ECB are doing the same thing, or might potentially do something. So to have a decent trend here, what you need is that you actually need maybe the ECB to say, okay, we're watching the market, but we're not going to do anything anytime soon. And that can create that discrepancy. And if that discrepancy indeed happens, then some people think we can go maybe to something like 115. But I wouldn't get too excited here because this is not a pure directional play here when you have two central banks potentially starting to do the same thing. And technically, we're within 111.06 and 13.52, so there's not too much to do anyway. As for GBP versus the USD, this market has moved substantially higher than I thought it would do. In fact, it traded above my trend defining level because right now everybody's sort of selling dollars, as you know. They're not necessarily buying, and it's a relative play here. They're selling dollars, but I can tell you they're not buying pounds. I can tell you that. Because Boris Johnson is probably going to win. We had, was it the third round of voting yesterday? And he's always getting those slam dunks almost, like it's literally perfect stuff, and he's most likely going to become the next PM unless the people, its own members of the Tory party have a big major different view than their own PMs. But I don't think it will be the case. I think Tory know themselves, and speaking with a lot of people that support them, they know that if they don't get Brexit done here, then that party is going to be, it's already severely damaged, but it could technically go under, morph into something else. I don't personally think so, but that's what I think a lot of people are thinking. So Boris Johnson is probably going to be the one, and I really, really hope he can get the EU to get a nice deal. But if they don't, it can be a big of an issue. So we'll see what happens. But I think the GBP will remain under pressure. Unfortunately, though, when you have these two forces here, it's going to be more random for longer. And I don't have a strong view. But again, the trend is, wouldn't surprise me if we trade a little bit lower here. But as long as people are selling dollars as they're doing now, this gets squeezed up a bit more. But I think if we look at this in a few weeks' time, will probably be around the same level. It's not going to be up or down. Crude oil prices, they're now bullish. So what I was doing? I was just waiting for either a bullish or bearish break. Remember, I was bearish from pretty much here. I was actually bearish from here, and that went well. And then I said be bearish from here, and that did not go well because we got stopped out. And then I think we were bullish here for a little while. That did not work out, but then we got this right, and the whole slide to the downside, we get that right. And then down here, I just been neutral, as you know, and now the market sort of traded to the upside. I think it's on the back of enthusiasm over these rate cuts, because obviously rate cuts will eventually increase demand for crude oil, and that could cause it could cause the price to go upwards, and you have dollar weakness in general that is causing this to go upwards. But we can go a little bit up, maybe 57 or so. If one is not already long from the breakout, you might need a little bit of a pullback. When I'm looking at this now, I think we can sort of lift the trend defining level a tiny bit to 52.68, but I'm not very enthusiastic about this, and I don't think it's too much worthwhile focusing on this one right now. But it's a nice little rectangle. The rectangle itself is just a $4.19 move, which takes you up here. Finally, German DAX on fire. So obviously with ECB telling us we're going to cut rates, I guess people are very enthusiastic here. The idea was just to wait for a dip. If you missed out, there's not too much to worry about. You know, the risk reward ratio is so paramount here. The markets always come and go. We're always going to have more opportunities than this one. There's other markets, other stock markets that are far more interesting. But here, again, I'd rather just wait and see what happens. If it stabilizes over here, then yes, maybe we can use that as a stop. But when I was looking at this morning, I said this is too fragile of a low to work with that as a stop. So that's why I'm still waiting for that pullback. In the longer run, let's see what happens. You know, the markets in general, they go upwards. So if we're gonna trade much higher, that would not surprise me. But again, there's better markets. Even the S&P could technically much better market if we start to take out these highs. But let's see. PMI on Friday, NFP next week. Okay, let's see if you guys have any questions. So I have Daniel Chong. Hey, how you doing? Good to see you here today. It says here, Daniel says, seems like Euro is not going to be weaker than USD. Yes, so overall right now, the Euro is doing slightly better, and that is causing the dollar is really doing worse off right now. It's doing that across the board, and in particular against gold. That I think is the purest trade right now, and it's just because of that relative, like these two central banks. It's the same. If you ask me, Aussie dollar, New Zealand dollar, they're both going. That pair is going down, but the RBA just cut rates in June. You know, next month probably the Fed is going to cut. So the question is now, who's going to be more aggressive? Well, according to the market, it's going to be more. The Fed is going to be aggressive. So maybe the dollar can bottom out, but it's because of the wrong reasons. I think that I mean that way why that would actually trade upwards. If I'm right in my longer term view, which is that economic slowdown will happen, then you can see potentially things like the yen strengthening, and I think the yen can strengthen against most currencies, maybe also the dollar, Swiss franc. That's where I would be focusing on. You just need to wait though for a decent technical setup. And if I'm right about economic slowdown and we're right about the dollar, well, in both of these scenarios, gold is gonna go up, right? So that's why gold is sort of the better one, and technically here as well, it's definitely the most interesting as the price is taking out these highs. But as always, the markets, at least for this year, has been rubbish from a breakout perspective. It could be just false alarm. So then, as always, just need to make sure the risks are not too elevated. As well, before I forget here, guys, we have a new thing for any client of ATFX. In the client portal, there's about 3 hours and 45 minutes of educational content that I produced. Came in here during the weekend and recorded for them. So it's 2 complete strategies, including my latest strategy, which you can get for free. You can also has some introductory bits to it, to why I like trend following systems. Right now it's open to anyone, because we have two set of accounts. We have the standard and retail edge. The standard is not, I'm gonna be straight with you, it's not really good spread wise, but the edge one definitely is. Spreads are tighter here than many of the bigger broker in the UK and worldwide, and we have not only tight spreads on forex majors but on the forex minors, and as well on the exotic pairs. They also have metals, they have gold, and they have indices, they have cryptos, and they have shares. So they have all of that. So if you do want to trade Uber, then they offer that. So it's really accessible in a good amount of markets. To access the edge, it's a minimum of $5,000, so 5,000 euros, so 5,000 pounds, and it's definitely worthwhile, I think. The standard one is okay as well. It's just that it's like, instead of minimum zero point 0.6, you have a minimum of around 1, which again is slightly wider. But what you do get with all of these accounts right now is access to my premium educational course. As well, if you sign up for the Edge account, you get access to one-on-one coaching with me. If you guys are interested in that, just send me an email to alejandro.zambrano@atfx.com. And remember, it doesn't cost a thing. To set up the account, to deposit money, to withdraw, it doesn't cost anything right now, and I don't think it's going to change anytime soon. And the education and everything doesn't cost anything. The way ATFX make money is that every time you trade. So every time you trade, for example, if you trade euro dollar here at 0.6, then they will make 60 cents here. If you trade a mini lot, if you trade a standard lot, they will be making $6. So that's how they make the trading, because their money. Because when you trade, that's how they get their spreads, and that's why it's free for anyone to access this educational content. Okay, I think we're gonna wrap things up, unless you guys have any more questions. Don't forget to like the video. It's very important that you support this daily market update. Again, don't forget as well to share. You can just embed it or just copy the link if you want to share that with WhatsApp or anyone on Facebook, Twitter. It's really important that you share it. Okay, guys, thanks so much for watching, and I'll see you guys tomorrow for the next market update here with ATFX at their YouTube channel. Thank you.